it will be me and Lloyd. So we might do a little bit of a different approach, probably. We could try asking each other questions, or Lloyd could try tricking me again. So I haven't been very much alive for the past 2 weeks. I've been busy with some personal projects. So now I'm back in it. And I guess a lot of interesting things has been going on in the market. Now, the cool thing about fundamentals on my end is that it doesn't change much over the over 2 weeks, right? There'll be some minor adjustments, some shifts of interest rates, etc. But the general bias probably wouldn't be a very big shift. So let's pop back in to the screen. So I'm going to share my screen and let's take a look at where things are and what I will be interested to be looking at in the next coming few weeks, and probably what do I want to look out for now that I'm again back in the trading game. Now, let's just take a look very simply at this chart I prepared. All right, so this is just an updated statistics taken from Trading Economics. All right, so this is the latest. I just input the figures over the weekend. This is just the latest figures, and over here on this right side is just the changes, the difference from the previous reading. So as you can see, I think the interesting thing over here is there's a lot of interest rate increases. All right, US increases interest rate by 0.75, the UK up by 0.5, Australia and Switzerland up by 0.25, 0.75. Singapore followed as well, 2.33, and New Zealand 0.5. Now, where it brings us to New Zealand having the highest interest rate at the moment of 3.5%, US 3.25, Canada 3.25, and then followed closely by, I'm going to ignore China because, we can't really trade the renminbi anyway, so it's just here as a gauge probably. Singapore is a floating rate, so going to ignore that too. So it followed next closely, I would say, by the UK 2.25%. Inflation, the front runner is still Euro, and not in a good way. It still has the highest inflation figures. Nothing surprising considering its block of European unions is rather vast. All right, but it has, I can see, I think, well, the UK, Canada, and I think the Swiss had a slight drop in inflation figures. The Singapore increased inflation by 0.5, Japan by 0.4, the EU a lot by 0.9. I think the US is still holding pretty stable at its 8.3%. All right. So if given the fundamental nature of who is buying what currency, I would like to take this week to let's go back to a little bit of the basics and take a look at imports and exports, right? Because movement of currency is all about demand and supply. Who is buying the US dollar? Who is spending the US dollar versus et cetera. So I want to look at trade surplus, the trade balance. All right, and this is the really interesting part. Now, one would think if you follow textbook, right? If you follow the textbooks and think about, okay, if New Zealand has a 3.5% interest rates, you would think that, there'll be a increase in demand for New Zealand, right? Because it has the highest interest rate. So if we do it via textbook, then we will probably get a little bit kicked in the butt, because we know now that fundamentals don't just work this way. It works as I would say, a bigger picture. It's a big chessboard, and there's a few other figures that factor in it. So we can't really just look at interest rates and say that, okay, just because New Zealand has the higher interest rates means there's going to be demand for New Zealand dollars, right? So when we talk about demand and supply of currencies, what we need to look at is what is being spent in the market, who is buying the dollar, who is buying New Zealand, etc., etc. How do we do that? We want to look at trade balance. Very easy. Go to your Trading Economics, click on your current account over here. I'm just going to let's just use UK. Okay, UK, current account minus 2.6%. I don't really want this figure. What I want is over here, balance of trade. So we want to look at this balance of trade. Let me just annotate it for you guys who are looking for this figure as well. I want to look at this figure, balance of trade, right? Because I want to see if we are buying and selling things, importing, exporting, etc. I want to see what is the balance of trade figures. Now, this will be really, really interesting because given that New Zealand has the highest interest rates, why, if you look at just Australia and New Zealand, the chart, right, why is the New Zealand dollar weakening against the Aussie dollar, right, despite Australia having a lower interest rate? Very simple. Let's go take a look at the balance of trade. All right, so you can see over here that New Zealand's recorded a trade deficit of 2.4 billion in August. So it had a negative trade deficit, meaning that it's kind of spending more than it's earning. right? To spend more than it's earning, it means that it's buying more of another currency as opposed to collecting more of its New Zealand dollars. So the trade balance kind of gives us a little bit of hint of where the flow of money is going into. So we see the New Zealand dollar having a big negative balance of trade. Let's look at Australia. Why Australia? Because they're always there's a very slight correlation. On the other side, you can see Australia having a positive trade balance. It's got trade surplus. All right. Even though the trade surplus kind of narrowed, but compared to New Zealand, it's in a way earning more money, earning more revenue than New Zealand. So that's like a very simplified way of looking at it. So taking that into effect, if Australia is facing a positive trade balance versus New Zealand with a negative trade balance, then it kind of makes sense why the Aussie Kiwi, this is a daily time frame, is still trending towards the upside. Okay, the trade balance is the key over here. Now let's talk about US. All right. So who is buying the US dollar? Is anyone selling the US dollar? Let's go and take a look at the US trade balance. Now, US trade balance, you can see that its trade deficit has been narrowing over the last couple of readings, right? From, I think the lowest point was somewhere in March. Over here, negative about 10 billion or something. And negative almost 100 billion. Now it's down to 67 billion in terms of trade deficit. So on the other flip side of it, even the US is narrowing its trade balance. A lot of things, of course, affects this. It's interest rate is one thing, oil is another thing. I mean, if you want to trade oil, you want to buy oil, right? Oil, it's traditionally bought and sold in US dollars, right? The other side is, of course, the euro side, but we're kind of focusing on the USD right now. So if everybody is requiring, if you will need to pay for essential imports like oil, like wheat, pharmaceuticals, loan bills due from the billion-dollar debts, then of course you have to use US dollars to kind of pay for it, right? So this is one reason why no one is selling the dollar, right? The dollar is doing pretty well. No one is selling the dollar because oil is getting expensive. You want to trade in oil, you need to spend dollars. So how do you do that? If I'm in New Zealand, I've got to sell my New Zealand dollars to buy my US dollars to buy my oil. Right? This is again a very simplified way of doing that. So I think the next thing to kind of keep an eye on is balance of trade. All right, UK balance of trade kind of still kind of improved a little bit, but I think the very stark difference, the very obvious difference that we have over here is the New Zealand dollar. 3.5 interest rates. It kind of is a little bit weird that, the New Zealand is not strengthening, and the answer lies in balance of trade. So what I am looking out for next week is to look for continued weakness of the New Zealand dollar, because I think they are facing some issues with their balance of trade. All right. So if we look at the New Zealand pairs, I'm going to look at, let's just go to Kiwi dollar. All right. Kiwi dollar, very, very strong downtrend, I would say. But what I am looking for, it's probably another brick and retest of this level would be cool. Okay, let's go. Let's Kiwi Swiss. All right, again, Kiwi Swiss, again, very similar price patterns would start to come. We have that pullback. I always like pullbacks because it gives us another opportunity to buy in. So again, I'm continuing looking for shorts for Kiwi Swiss. And if you guys have been following my Sunday night sessions, you know that I'm bullish on the Swiss because of the stability in its statistics. So Kiwi Swiss is a very natural opportunity to look for shorts over here. Now, it looks like we might be a little bit slow to catch this movement, but it just about broke this level. So I think we can still possibly catch it next week. We just have to wait for those retracements. Other pairs that I want to look at, probably let's take a look at Aussie Kiwi. Now, Aussie Kiwi, I think on the technical side, it's pretty clean in a way that, it has that higher low, nice inside bar. The technical signals are there. There is potential of price doing, I think this is Lloyd's, one of Lloyd's favorite brick and retest move, and we'll see whether we can catch this as well. All right, so that's all for me. We only have a very short 10 minutes to share with you what I'm looking at. So I'm looking for the weakness in the Kiwi, strength in the dollar, and continued strength in the Swiss. And for more, do come into my Sunday night session. I'll be restarting it this evening. Over to you, Lloyd.
All right, thank you, Alexis. Let me grab the screens. So over on my side, it's actually pretty straightforward. Let me grab the screen. Yeah. So I think that after about 2-3 weeks of waiting, continuous waiting, the chart is actually rather clear to me now. So you can see that I've only one pair to long, and that is really the dollar index. All the other are pretty much either in consolidations or they are retesting a technical level to go short. Yeah, as such, my decision to trade for the following weeks ahead, just the only game plan I have is actually just a long dollar. So let's have a look at the currency. So you can see that DXY on the weekly chart. This is a very nice break of the 110th, and here we form a very nice rejection bar of this level. Yeah, so you can see that the DXY on a weekly chart still a very, very nice uptrend. I think no one can deny that. And with these price actions, this is what we essentially has a pin bar. Yeah, nothing can deny its movement, I guess, other than another threat of war. But the British index is a bit hard to trade. I think for those of you who are actually following the news, you have read the newest Prime Minister. How do I pronounce the name? Liz Truss? Uh, is it Truss? I'm not sure, but I'm pretty sure that nobody is actually trusting her much nowadays. Yeah, given that the fiasco that she just pulled. So you can look at the British pound after a plunge, recovered and actually retested this level, which all the way from 2020 up to now, this level has been, this is the only technical level that I can find, but I cannot give you a very good shot of the British pound because we'll be trading straight into the 110 level. Yeah. So this will be, I would say that I'm going to long dollar, British pound, I'm going to just leave it as it is. Yeah, simply because this 110 is just a strong level that I do not want to trade into. And the New Zealand index is pretty much the same story. Very nice double bottom, in fact. Yeah, whether this will be in fact a true double bottom, I do not know. But I can see that back from the 2020 March, yeah, this level has held. So as such, if there's a strong horizontal level, let's make it a good practice not to trade into it unless there's a break and retest somewhere that we can find to go short. Now the Aussie index is actually pretty, it's in no man's land. Yeah, you can see that Aussie has been selling for the past several weeks, gap up, and then another selling bar. So in fact, I do interpret this as a once as a gap bar and then continue is bearish momentum. I do interpret this as a very, very strong selling momentum. Is there any reason to buy Aussie dollar? I do not know. But from technical side, there's a very strong reason to sell it. Yeah, so this will definitely be one of the pairs that I'm looking forward to trade. In fact, Japanese yen, I should rank it higher than Aussie index, my bet. So the Japanese yen, I'm a bit reluctant to trade. You can see that price has been hugging the $70 level for quite some time already. Now, I do not see this as a decisive break or a decisive bar. Yeah, this is really the past 5 candles is just really consolidation at $70. What will happen? In fact, if you go to the 4-hour chart, the Japanese index will easily be in a range. Yeah, and Aussie index, I've already been through it. But the Canadian index, interestingly, so I think after the Saudi Arabia news that is going to cut the 2 million per barrel per month, whatever that is, you can see that the CAD is still on a pretty strong selling momentum. It broke this level, which is about $73. Very nice high test bar. Yeah, as such, I'm not going to go with fundamentals. I'm just going to go with whatever the chart shows me that this is a selling opportunity. Now, Euro index is one of the clearest selling opportunity I have. It's complete opposite of the US dollar. You can see a very nice downtrend. Price broke the $100. Very nice retest with a high test bar, which is really just the complete opposite of USD. And this is just screaming for me to sell it if there's an opportunity that arises. And the last on my list is actually the Swiss. Again, I ranked that wrongly. It should be in the middle. Shouldn't be that. Yeah. So as such, really what I'm looking forward to trade in the following week will be, again, the strongest against the weakest will be going along USD. So we can see that this is a very, very nice level. It has been retested 3 times. Yeah. So dominant trend, definitely still an uptrend. Yeah. So this is a very, very complex movement at over here. So let's not trade the complex movement. Let's wait for price to have a break and retest of this level, and then I'll be completely happy to go long. And next on my chart will be actually the Euro USD. So if you can, this is the 4-hour chart, by the way. So on the 4-hour chart, you can see that this is in fact a very, I won't say nice looking, but it is still a present head and shoulder. Yeah. So as such, I'm just simply waiting for a break of the head and shoulder, retest of this level, and I'm happy to go short. Yeah. So just to repeat, USD is the only one that I have a bullish sentiment. The rest is just consolidating, or most of the time bearish sentiment on my side. Yeah. But that's all for me. Alexis is back. Does that concur with Alexis' analysis?
Actually, pretty much. I mean, if I did have more time, I'm pretty much in line with you. You know, euro inflation is so high now. There's no way that anyone will want to buy the euro at this point. I think, I don't know, I think my question for you would be, you know, with this Ukraine-Russia war escalating, right? How should we approach trading the currencies or indexes? Or is there anything that we should stay away from, avoid, or be careful about, you know, in the next couple of months, while the intensity of this war is, you know, getting worse, I guess?
This is more of a fundamental question, more than a technical, actually. I would say that from my previous knowledge, whenever the world is in havoc or in some kind of turmoil, just long USD and probably long gold if you have the opportunity. All the other currencies are stay out of it, or rather, yeah.
Yeah, that is kind of my sentiment. I mean, one of the reasons probably why I am also bearish on the euro is also because of its proximity to the conflict. You know, imports and exports are definitely affected. So I would pretty much, I don't think people would want to park their funds anywhere in the euro regions in terms of safety, because we don't know how bad the spillover can get in terms of medium to long term.
If the war effort continues to prolong, US is not going to suffer. Euro will be the next door neighbor that suffers first. Yeah, I mean, the only thing that comes out of it is maybe if euro falls more, then next year we can try asking Paul to go euro for our trading retreat. Because it will be that cheap.
Yeah, it's I think it's below. I mean, how low do you think it will go? It's already hovering. I think it touched the 96 cents, right? Euro dollar now, you know, way below a dollar. How low do you think it will go? Just a guess. You know, I think this is both of us are trying to just guess the points just for fun.
Just for fun, to be sure, there's nothing technical that I can reference here. So I will actually wager a guess that euro will drop about up to 0.85.
0.85. Let me just do you one and say that as long as the war is going on, I'm going to say 0.75. I'm going to go 10 cents below you. Let's see in the next couple of months where it shoots to.
It's going to fall a lot.
It is going to fall a lot. I mean, there isn't, it just looks really bad. I mean, the technicals look bad, the fundamentals look bad. I think unless something comes out positive from that area, I don't see how people would, or hedge funds would want to park their money in anything euro related, at least for a medium to long term hold.
Technically, if I were to really euro, I think this is very far fetched. So forget it. It should continue to fall if all things. The interesting thing, if you don't look at euro, if you look further, right? And if I take this as a reference, a euro pound chart, the thing with what's benefiting is that the US military industry is actually benefiting from it. So on the other hand, the Britain military complex is also benefiting from it. Yeah, they're selling quite a fair bit of advanced weapons. They already have chalked out quite a bit of back orders. So as such, then euro pound should actually continue falling. Yeah, because euro they're not really that huge of a military contractor. Yeah, so plenty of room to actually go down.
Yeah, it really does look like it.
All right, we have one question I want to chat. Lionel, what about pound? Pound USD? Yeah, I'm still going to short pound. I mean, seeing that it doesn't, I have no sentiments to actually long. The thing about pound is that people are really guessing whether the current prime minister can she stay until December.
Yeah, I think the pound faces a lot of political instability. I mean, if you do trust and least trust, you can buy the pound, but if you don't trust, you can short the pound, I guess, in a way.
So to me, the pound, you can see then lower high. So it's actually, on the 4-hour chart at least, it's actually at a very nice level that I can actually do this, just waiting for it to happen. Yeah. So if you were to trade it, I would say TP1 will be at this level, and TP2 I would just aim for this level. So this would easily, if it sets up as a one of the famous Jaguar and ATW, I would really wait for those kind of 10:1 trade if it sets up.
Yeah, I
would just be aiming at this
I
level.
kind of agree with you. I think even on a like if I zoom out all the way on the monthly chart, I think there is still a lot of downside to the pound in that sense. Like this same chart you're looking at, if you look at the monthly, I think the lowest it ever kind of touched was 1.05. That was back in the 1980s when they had really huge I think issues back then. That was even so I think if a retest of that level would be I think a retest of that level will be very interesting, because it's either it's going to bounce straight up or it's going to break and retest down, and then we will have our answer on that support, or whether or not the pound has any way to go. So it's time for holiday in London soon.
Anybody who used to holiday in London and you're holding on to pound, I suppose you're crying. Now you're bleeding.
Probably. I think when I went to London 2019, I was like 180 around there, 180, 170. Now it's like, oh my gosh, my pound is almost half its value.
That's really painful. Catherine, so Paul talks of real nuclear risk. I would say there's actually a nuclear a page that warns about how near we are to a nuclear fallout. You can actually Google about that. So we are actually, in the history of mankind, we are actually really, really near right now. Yeah, other than the Cuban Missile Crisis. Yeah, so we are as near as that's why everything falls but USD, because US has the biggest gun. Yeah, so by that argument, those who have the biggest guns would tend to survive.
Yeah, it's also because being a world currency and everything is traded based on the dollar, and it's the most like every economy would have some USD in their foreign reserves. No matter how big or small your economy is, there's some USD that's kept by the government, right? So if all things go to YT, I guess, the fallback is, if it's not gold, it's probably USD. How badly, I don't know. I mean, logically speaking, a nuclear fallout wouldn't be good for anyone. But again, I think Putin is human, Biden is human, and as humans go, you get angry, you just punch the button. I guess you never can tell, because politicians are still men, I believe.
Let's hope none of us will ever get to that.
Hope so. I hope so too.
Okay, so with that, thank you for joining us today, and hopefully 1 month later, both of us will still be back and not entertain any sort of nuclear threat.
All right, have a good day, guys. See you.